So good day everyone. So today is our fifth week for the second quarter lesson for the subject Fundamentals of Accountancy Business and Management 2. So this is just a continuation of what we had discussed last meeting and another topic also. So the bank reconciliation process. So we have here the steps. So the first step is that adjusting the balance per bank. So the first step is to adjust the balance on the bank statement to the true, adjusted, or corrected balance. So the items necessary for these items are listed in the following schedule. So for the balance per bank statement on August 31, 2000, XX, or let's just write there 2021, the adjustments are we have the additional deposit in transit, the deduction, which is the outstanding check, and then the additional or deduction bank error. So the adjusted corrected balance per bank. And then next is we have the step 2, adjusting the balance per banks. So the second step of the bank reconciliation is to adjust the balance in the company's cash account so that it is the true adjusted or corrected balance. So examples of the items involved are shown in the following schedules. So the step 3 is that comparing the adjusted balances. So after adjusting the balance per bank for the step 1 and after adjusting the balance per banks for step 2, the two adjusted amounts should be equal. So if they are not equal, you must repeat the process until the balances are identical. So the balances should be true, correct amount of cash as of the date of the bank reconciliation. So the adjusted cash balance will appear as the cash in the bank in the statement of financial position or balance sheet. So we have an example illustration. So the following unadjusted cash balances are available for Pilar Company for the month ended September 30, 2019. So the cash balance per bank statement of September 30, 2019 is 124,611 pesos and 50 centavos. While for the cash balance per company records on September 30, 2019 is 124,379 pesos and 40 centavos. So, the bank statement disclosed the following information. Charges by bank included a return customer's check for 1,381 pesos and 40 centavos because of the insufficient funds or the NSF and service charge for September of 150 pesos. So the credits by the bank included a customer's note for 12,000 pesos plus interest of 120 pesos that was collected on September 29, 2019. So a review of the company records disclosed the following information. So a deposit of 11,428 pesos and 70 centavos made on September 29, 2019 did not appear on the statement. So the bank statement disclosed the following information that I have shown you or I have told you a while ago. So the customer's check totaling to 3,274 pesos were still on hand at September 30, 2019 awaiting deposit. So the following company checks were still outstanding as of September 30, 2019. So next, so we have here, you have to prepare a bank reconciliation for Pillar Company as of September 30, 2019. So the bank and book balances reconciled to correct the cash balance. So here this is how it looked like on how to make a bank reconciliation for the Pilar Company. Next. So now, let's have our new lesson. So our new lesson is all about the income and business taxation. But before that, let me first read to you the objectives for this topic. So at the end of this module, you are expected to define income and business taxation and its principles and processes. Explain the procedure in the computation of gross taxable income and tax due, and explain the principles and purposes of taxation. So by the way, on this lesson, business taxation and its principles and processes, or income and business taxation, this will be your last lesson for the second quarter. Alright, so now let's continue. So the principles of taxation. So what are the principles of taxation? So governing tax law in the Philippines is the National Internal Revenue Code of 1997. So the Bureau of Internal Revenue, or BIR, is the primary implementing agency of this law. So again, from the word taxation. So what is taxation? So taxation is the process by which the government collects revenue in order to pay for its expenses. And then income tax. So when you say income tax, it is defined as the tax on the net income or the entire income realized in one taxable year. So who are required to pay income tax in the Philippines? So here are Section 23 of the National Internal Revenue Code, or the NIRC of 1997. So, ito yung mga required na mag-pay ng income tax dito sa Pilipinas. The first one is, a citizen of the Philippines living in the Philippines is taxable on all income earned as inside and outside the Philippines. A non-resident citizen is taxable only on income earned in the Philippines. An OFW is taxable only on income earned in the Philippines. A foreigner living in the Philippines is taxable only on income earned in the Philippines. A domestic corporation is taxable on all income derived from sources inside and outside the Philippines. And a foreign corporation is taxable only on the income derived inside the Philippines. So we have here also the list of sources of gross income from the NIRC 1997 Chapter 6, Section 32A. So first is the compensation for services in whatever form of paid, including but not limited to fees, salaries, wages, commissions, and similar items. Next, gross income derived from the conduct of trade or business or the exercise of a profession. Third one, gains derived from dealings in property. Note that subject to 6% capital gains tax for individuals and for corporation if land and building is not used in business. Next, interests. So you have to note also that generally subject to 20% final withholding tax. And then rents, royalties. So generally subject to 20% final withholding tax and then 10% if from books and literary works. Dividends. So generally also subject to 10% final withholding tax for individuals and tax exempt for corporation. We have also annuities and then prizes and winnings. So this is generally subject to 20% withholding tax, except those that are tax exempt based on the specific criteria in the law. We also have pensions. And the last one is the partner's distributive share from the net income of the general professional partnership. Next, we also have the compensation income. So, employed individuals that earn compensation income pay their income taxes monthly. So, employers withhold the income tax of their employees from their monthly gross income and remit these sums to the BIR, or the Bureau of Internal Revenue. So, Philippine individual income tax is progressive. So, the tax rate increases as the tax base increases, which means that taxpayers with more capacity to pay will pay more taxes. Next, all individual taxpayers are granted a personal exemption of 50,000 pesos and then additional exemptions of 25,000 pesos are given for each qualified dependent, but only up to 4 dependents. So for husband and wives with children, where only one spouse can claim the additional exemption. So the husband is deemed head of the family and will claim the deduction unless he explicitly waives his right in favor of his wife. So withholding income tax for employees. So employers are required by law to withhold income tax dues from their employee salary. It is implemented because employees might not have sufficient cash to pay for their income tax dues of aggregated to a one-time annual payment. So the withholding tax deduction is computed based on the employee's gross compensation or the net of mandatory contributions to SSS or GSIS, PhilHealth, and Pag-ibig Fund. So tax status, timing of compensation payments, and using the published BIR withholding tax table. Next, so income tax. So it is computed at the end of the year. So based on all the compensation income derived during the year. So taxable income is computed after deducting personal and additional exemptions, and an applicable tax rate is applied on the taxable income to get the tax due. The total income tax withheld by the employer is deducted from the tax due to get the remaining tax liability by the employer. So taxpayers who derive their income solely from compensation are required to file BIR from 1700 as their income tax returns. However, to give relief to these taxpayers, the employee may present BIR from 2316 as their income tax return. So BIR from Form 2316 is a statement issued by the employer and signed by the employee but not filed with the BIR. So this is referred to as the substituted filing. So you have to note that there is a misconception that individual income taxation is about compensation income, but this is not true. An individual may be generating income from compensation as an employee and business for part-time services or consultation services. So also, an individual may also be generating solely business income if his or her business is legally organized as a sole proprietorship or general professional partnership. Business income. So the tax payment of a business organized as a sole proprietorship are made in the name of its owner. So the owner is considered an individual taxpayer who derived income from business. So he is required to file BIR from 1701. So businesses may settle their income tax liabilities and submit their income tax returns. So to the government 3 months and 15 days from the close of the year. So for a business that follows a calendar year, the date of settlement is April 15. So some businesses pay income tax on a quarterly basis. Based on their quarter-end income, quarterly payments are due 60 days following the close of the first 3 quarters of the year. So when the tax due is in excess of 2,000 pesos, the individual taxpayer may elect to pay the tax in 2 equal installments. So the first installment shall be paid at the time the return is filed, and the second installment is paid on or before July 15 following the close of the calendar year. So we have here 2 approaches for the computation of income tax for the business. So first one is the itemized deduction. So use the itemized expenses in the income statement. So the business should have a complete set of accounting books and supporting receipts for the deductions that were itemized on the tax form. And then the optional standard deduction scheme. So deductions are up to a maximum of 40% of gross receipts. So gross receipts is equal to net sales plus other taxable income. So this means that the business taxable income is equivalent to 60% of gross receipts. Mixed income earner. So it is a compensation earner who at the same time is engaged in business or practice of profession. So a taxpayer deriving mixed income will also use the BIR from 1701. So we have here the taxable income and tax due. So annual tax table. So effective date January 1, 2018 to December 31, 2022. So not over 250,000 pesos, you have the 0%, and over 250,000 pesos but not over 400,000 pesos, there is a 20% of the excess over 250,000 pesos, and so on. Next is the compensation income. So gross compensation are the salary and other bonuses, so less statutory contributions like the SSS or GSIS, PhilHealth, and Pag-ibig Fund, the gross compensation net of statutory payments. and then less 13th month pay and other bonuses that are exempted from income tax. So gross taxable compensation income is less personal the 50,000 pesos per taxpayer and additional deductions of 25,000 pesos per qualified dependent, maximum of 4. So the net is equal to the net taxable compensation income. So we have here an example. So Juan de la Cruz generated annual compensation income of 615,000 pesos. So statutory payments are as follows: SSS minus the 6,975 pesos and 60 centavos, and then PhilHealth is 5,250 pesos. The Pag-ibig contribution is 1,200 pesos. We have a total of 13,425 pesos and 60 centavos. So the tax-exempt 13th month pay and other bonuses is 60,000 pesos. So we have to note that maximum tax exemption for 13th month and other bonuses is 82,000 per revenue regulation 3 of 2015. So now our gross compensation for the salary and other bonuses again is 615,000. And then for our statutory contributions for the SSAs, GSIS, PhilHealth, Pag-ibig, we have 13,425 pesos and 60 centavos. And then for tax exemption for 13th month bonus is 60,000 pesos. So we have now our gross taxable compensation income is equal to 541,574 pesos and 40 centavos. So, next. Same with the other problems. We have the scenario 1 and scenario 2. So, Juan de la Cruz is single with no qualified dependents. So, based on that, may nawala. So, it's just have the gross taxable compensation income. And then less is the personal deduction. So, and then wala na yung SSS, PhilHealth, Pag-ibig. Wala na yun siya. The net taxable compensation income is equal to 491 pesos, 1,574 pesos and 40 centavos. The same with the scenario 2, Juan de la Cruz is married with 3 qualified dependents. So, yung additional deduction is multiply by 3 kasi tatlo yung qualified dependents niya. Okay. So, business income, the total revenues are those sales, the professional fee, and then we also have here the total expenses, the taxable income from business. So we have the personal, which is 50,000 pesos per taxpayer, and additional deductions of 25,000 pesos per qualified dependent, maximum of 4. So the net taxable income. So now we also have another problem. Juan de la Cruz is the owner-manager of the JDC Trading Company. So total sales generated during the year amounted to 1,230,000 pesos. Cost of goods sold is 492,000 pesos. And total operating expenses is 184,500 pesos. So the company opted for the itemized deduction. So again, the sales is 1,230,000 pesos. And then the less of goods sold is 492,000 pesos. And then the gross profit is 738,000 pesos. So now the less operating expenses is the 184,500. So the taxable income from business or profession is 553,500 pesos. So next is here. We have there if the scenario 1 is that with no qualified dependent, meaning there is no compensation income. And then, personal deduction lang siya, which is 50,000 pesos. Next is, how about if we have one qualified dependent? So, now we also have the net taxable compensation income, which is 75,000 pesos. And then additional deduction wherein 25,000 pesos kasi 25,000 pesos per dependent. So now the net taxable income is 478,500. Next is mixed income. So taxpayers earns both compensation and business income. So we have here an example. Juan de la Cruz, a married man with 2 qualified dependents, generated income from the following sources. The compensation income We have the annual compensation income generated was 555,000 pesos. The statutory payments are as follows. We have the SSS, PhilHealth, Pag-ibig contribution for a total of 13,425 pesos and 60 centavos. The tax exemption were a 13-month pay and other bonuses, which is equivalent to 60,000 pesos. And then the employer withheld is 89,471,000 pesos with 16 centavos. So the professional income, we have the consultancy services earned 1,230,000 pesos. The clients withheld 61,500 pesos and provided creditable income tax withheld tax return. So he has no record of the receipts of his expenses, so he opted for standardized deductions. So here is the picture on how it looks like, the solution for the problem. So now, so from tax table, tax due for 1,119,574 pesos and 40 centavos is computed as follows. So 130,000 pesos plus 30% of the excess over 800,000 pesos. So this is now the picture. So that could be all for the lesson for the second quarter, the fundamentals of accountancy, business, and management too. So I hope you have learned something for our lesson for this quarter. And that could be all. Thank you and goodbye.